up? What is up? It is Hump Day. Welcome, everybody, to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a phenomenal last couple of days as we saw the markets give a pretty big rally and followed by a meh follow through after our drop on Sunday night. So we're going to do what we do each and every day, looking at our four major markets, S&P, NASDAQ, crude oil, and gold, and then take a look at our stock of the day. Do me a favor, if you're new to the channel, click the subscribe button, hit the notification bell so you get the alerts, the updates, all that fun jazz. And if you're not familiar with this style of trading, go to tradersarmy.com, learn a bit more. All right, let's go ahead and get started. So starting first with the ES, our S&P 500 markets up 22 points right now. We were able to put in overnight on an hourly chart, we did establish a higher swing low. So we do have on an hourly chart two consecutive higher swing lows. Now those two consecutive higher swing lows have not been followed by two consecutive higher swing highs as of yet. So while we did get a higher swing low, it did not crest the higher swing high, which occurred the night prior. So what does that mean? Well, on a 4-hour chart, what that means is that we are building a bit of a base. Building a bit of a base is an important element. And if I look at this on a daily chart, we can see that we had a long wick of buying pressure, followed by yesterday a pretty long wick of selling pressure. Now, I want to take a look at that on the spiders. The reason I want to look at that on the spiders is because I want to take a look at it at just regular market trading, right? No, without any glowbacks. And when you look at it like that, what you can see is that it was a big buying pressure reversal day. We did get higher than that candle's high yesterday, but we weren't able to close above the high. Matter of fact, we closed below the closing price of the prior day yesterday. Now, in the overnight of the ES, we are trading up, but we're not really moving that much higher. And so when I look at it like that, that tells me that this could be a weak rally attempt, and that weak rally attempt may not get me enough follow through in order for price to continue to move. Or B, it could just be a lot of buyers are starting to slowly scale back into positions. So which is it? Well, the correct answer is we don't know until the chart tells us. I'd love to give you a guaranteed 100% prognostication, but that does not exist. Because we don't know which way it's going to turn. So how do I trade it in the meantime? Well, the correct answer is I don't. There's no reason for me to force a trade when I am sitting between areas of demand and supply. Now, my 4-hour chart, like I said, is giving me a higher swing low, but I've not yet got a higher swing high. Once we get above this candle's high, then by definition we'll be in an uptrend because we will get higher swing highs and higher swing lows. Once we begin an uptrend on the 4-hour chart, this level up above at 44.20 has to become a confirmation entry. But if we don't crest above that level, then I'm not going to have to worry about it at this point. So can I use just this level right here? You certainly can use this level here as a supply. The downside of using this level as a supply is that this is not a fresh supply zone. It's a retest of this area over here to the left. And so while I like the level as a supply area, it's not a fresh level. It's a retest of this items to the left, and there's basing in front of that level. If you know what basing is, do me a favor, put it in the comment section down below. I'd like to hear if you know what is basing. That's our quiz of the day. What is basing? Put it in the comment section down below. So because of the basing and the fact that it's not the origin of a move, this, in my mind, becomes a breakout candidate for basing somewhere underneath here, for then we get an opportunity to move a bit higher. Next is the NASDAQ. And looking at the NASDAQ, we get, oh my, the same picture. So not a whole lot to lean on here on the NASDAQ. When I'm identifying tradable opportunities, I don't really see a great one in either one of my index markets today. Now, remember, we're going to have FOMC conversation coming out this week. And so as the FOMC talk happens, we may see that the markets do get a move one way or the other. Taking a quick look at the Russell, I want to just slide into the the Russell markets, we do see that the Russell, if I pull this to a 4-hour chart, that the Russell is closer to giving me a higher high, but it's not giving me one yet either. So none of my markets are quite there. None of my markets have given me yet quite that higher swing high that I need. But I do think that if the Russell breaks above 2207, it actually has the best, cleanest path to 2222. So you can pull a nice 10-point run out of this area. I'd even be okay if you want to be a little premature and get long above 2201, because I don't think that this 2207 supply level is going to hold very well. Looking at crude oil. So looking at crude oil, we can see that crude oil did not make it all the way down to our area of demand. Crude oils is, wow, you know what? As I look at this on a 15-minute chart, we are putting in a really nice kind of symmetrical pattern here, which could stand for a pretty nice breakout. So keep an eye on this symmetrical triangle pattern that we have forming here. 1, 2, 3, 4, 5 touches or so in that region could lead to an opportunity for a breakout. If you don't want to take the breakout on the pattern itself, you've got a supply level here that was hit once, twice, and we're basing in front of it a third time. You could just take the breakout above 71.81 in crude oil back to the upside. And then gold, we can see that gold had approached our supply level. This was frustrating. I was like, oh yeah, here we go. Let's do this. Triggered my alert. I saw no basing in front of the level. Triggered the alert, set up the order, and then no thank you, as it did not get into the zone. Was unable to trade back to that area. And so I'm going to look to this area here, which was the origin of this move up that almost got us in. This now needs to switch to a confirmation entry because we came close to it, but we're unable to get in to that particular trade. So those are our 4 major markets for today. If you guys have any questions on those 4 major markets, let me know. But now let's take a look at our stock of the day. And our stock of the day is we're going to take a look at one that is showing some relative strength. And so the relative strength stock of the day that we're going to talk about is Tesla. And when I talk about relative strength, what I mean by that, let me open this up, pull this to a daily chart. I'm going to throw a quick comparison chart on the screen. And the comparison chart that I'm going to throw up there is going to be my comparison to the S&P. And what I want you to notice is that over the last few days, the S&P has dropped from its high down to its low, and it's dropped about 9.5% from the high to the low. Whereas Tesla from the high to the low has only dropped about 4%, right, over the same period of time. So while Tesla is not it's not up, it is down less than the rest of the market. And it has been in a fairly nice upward trend. We can see that we've got a fairly nice trend that has, continued to move higher. We've got a little bit of a slowing of momentum, but that's, the whole market has slowed its momentum. So I think that for Tesla, if you are interested, above 763 is going to be a pretty good opportunity for entry. Now that's still $20 away from where we are right now. However, that's, we're going to gap up today to, it looks like about 743 in order to start the day. And this is a reversal candlestick pattern right here. So if you wanted to be a little premature on this, anticipating the breakout, I would be okay with you getting in on Tesla a little bit early to ride it up. Now, the thing, interestingly enough, about Tesla, with these 2 long upper wicks that we have, those are interesting because in my mind, that makes the top of these wicks an eventual price magnet once we can get through all the resistance that exists here and here. So I think that Tesla could serve for a slightly longer term play to make it up into this region. So for those of you that use, if I throw my implied volatility on here, our volatility is actually in the lower range on Tesla, but it's still a 51 volatility, right? So I think you could still utilize Tesla. You could go with the long call. You could go with a bull call spread. You could even theoretically do. It's not where we typically want it, but you could theoretically do a BFF on this for those of you that understand that option strategy. If you don't know options, go to tradersarmy.com today, learn a little bit more about options, see how they can help you in your trading. But until tomorrow, buddy, I hope you have a great day. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.